Hello, this is Dave, and welcome to Equity Story. I'm here with the Wolf, and this is just a general share advice and not personal advice. Funny enough, before this interview, Wolf gave me his own personal advice and told me what I am allowed to talk about and what I can't talk about.
Yes.
And I think fascism was one of them. So anyway,
Let's talk stocks. Let's talk about what happened last night on the Dow. What happened today after the interest rates?
I think the pre-recordings would be more fun for our viewers. But anyway,
possibly, but it might alienate a few.
Yeah, I know.
Right, Dave.
Well, I thought the price action was good on the Dow. Yes, it was slightly down, Wolfie, but had a massive move up last week and held up above trends. So for me, that was a win. Yeah, you know what? You shake your head, don't you? Maybe potentially the worst economy for 30, 40 years, and the Dow is holding up reasonably well, and the market, for the first time, is really starting to ignore a lot of bad issues out there. I mean, you would never have thought in a million years that the market could ignore war.
I know. What is it coming to?
Well, it's ignoring possible recession. It's ignoring war.
Yes.
It's ignoring inflation going through the roof.
Yes.
It's ignoring disastrous government around the world. And you know what? But what it is celebrating in some ways the individual companies, right? It's celebrating good companies that are going through this and they're still making money, because you know what? With all the disasters around the world, I think the market is saying we just don't trust the bond market.
And you know what's also celebrating is its history. Is that every time there's a big sell-off, there'll be a bounce. That's why people get attracted to that sort of stuff. You know, they've learned what actually happens on these sort of times.
So you know, I'm still sticking by the fact that I think we're going to have another leg down with the war in Ukraine, which is going to get very, very, very nasty. But it's just a nibble and possibly a nibble. You know, we said last week when we saw the markets coming back, start lifting your exposure a little bit. And I think when we do come down, it'll be quick and sharp, and that'll be the next time to maybe lift your exposure to a few stories. Wolf, I just want to talk about coal.
Okay, let's start coal.
Because it's been a tremendous winner this year, and you can see Whitehaven, absolutely fantastic coal chart, nothing wrong with that. And really New Haven still holding trend very nicely on a weekly. But there's a big no-no for me in both these charts. And this is the big red candles, which is a little bit worse on NHC. And I know NHC did recently pay a dividend, and I get it. And I can understand it coming down a little bit for that reason. But again, you saw coal down sort of 5%. Before we look at the charts, what's your take on the coal market? And I could maybe bring this summary over, and we spoke about this a little bit earlier, and it's very, very good trading.
I think the question is, from reading the article, is the party over pretty much, right, for coal?
Well, what they're saying here is that South Africa have listed and boosted production to cope with demand. And on top of that, top consumer China has vowed to raise coal production capacity this year by 300 million tons, which is about equivalent to the amount of coal China usually imports yearly. They still say coal should still remain elevated in the medium to long term, supported by robust demand. And if you sort of look at the sort of forecast of coal prices, they're sort of saying actually that this they believe is the low, but then it's going to peter out. My question for you is, you know, you've got a lot of people in coal, and maybe they've held it and they've taken the dividends, and there's two top contenders here, NHC and WHC. What are you doing with your coal at the moment from a fundamental view?
Okay, let's go back a step before we look at the coal stocks
Mhm.
and ask yourself, are we, in extraordinary times with coal? And we have to be, because the coal doesn't normally trade at these levels. It's up 500%, Dave. This is unprecedented. There's a number of reasons why it did that, understandably. But if you take the extraordinary circumstances that are in and say things will normalize, you just cannot see these coal prices staying at these levels. And look, even in extraordinary times, is the reason for it go up 500%? Probably not. I mean, 200% would have been good enough.
Well,
But this is what drives some of these things. It's just short-term market ructions. And for me, Dave, I have to say, look at that. See, look at that. I mean, for so many years, he's done nothing really, right? Between that 50 and $100, right? Roughly. So for me, eventually the music stops with everything when it's extraordinarily different from the norm. We know that war will probably end one day, right? We know the production can be lifted. And we've seen it with South Africa. We've seen it with China now. Australia possibly can also, probably out of America as well. So if there's huge prices like this, and it's persistent for some time, what do you think the companies will do? They will try to increase production as much as they can to cash in on this huge boom. So eventually, the production will catch up to demand, and you'll see the price. This is just economics 101. So for me, is this the start of the decline? Quite possibly, Dave. Quite possibly, we're going to see now moderating coal prices, which means maybe it's time to say goodbye to coal stocks, but play the charts. That's the very, very important thing here. Play the charts. But just reading the commentary, thinking of the bigger picture ahead, can we have a persistent higher prices still? Absolutely, we can. But generally speaking, I think, I think we're at the apex of the whole thing. How long further does it last? This is going to start declining of it, possibly. I think we've climbed the mountain, now on the way down.
All right, and what you're saying, Wolf, it's hard to know how quickly that could be. It could take it could take a year and a half, or it could take 2 weeks, right? Who knows? So let's listen to the Wolf here, and let's look at the charts and just say to ourselves, and put it on a shorter term chart, Wolf. If you're more of a shorter term trade, and say to yourself, now hold on a second, it's done something that it hasn't done for a while. It has come down and flirted with that red line. Maybe you sell now, and you buy back if it goes over 611. If you're in New Hope Coal, or if you're still in it, maybe you could say all that 527. But I think really you sort of get out now. If it jumps back over 611, you get back in it. And again with Whitehaven, which has just poked its head below that 936, I think if it gets back over 936 and looks bullish, you can get back in, right? I think you've got to you made a lot of profits. You've got to start protecting a little bit. And you know what? If we're wrong and suddenly coal demand, according to Trade Economics, they actually believe coal prices are going to go up another $100 over the next year. In their forecast, if that happens, well, okay, fine. You just get into it and buy back in as soon as it jumps over that sort of 936. Equally, what you could do if you had more of a long-term view and you disagreed with what we're saying, you could say to yourself, well, long-term, I'm a believer in coal. I don't believe what you're saying, Wolfie Dave.
Yeah, there is no climate change.
There is no, don't get me started. I know. I think if it goes below 811, you'd get out. Yep. And obviously with New Hope, I think again 537, you'd get out. So you need to use the, if you're going to use the charts long term, you maybe give it a little bit more leeway. But I think my advice, what you're saying is sort of worries me a little bit. Wolf, I'd be a little bit more, and depending on how much money I've made out of it, I'll certainly be wanting to protect my profits.
100. You want to protect your profits, and like I said, just reading through the lines, it seems like the demand's catching up to, the supply is catching up to the demand. So usually when that happens, prices moderate. I mean, it's only natural. It's not. I'm not giving you something that's out of the ordinary, Dave. It's just normal. So you'd expect eventually that things will come back to normality, like things do over a long period of time anyway.
Precisely, and they do.
Mm.
Wolf,
Yes.
you talked about WA1 being a really interesting story. Now, I've had a bunch of people that bought this, and now they're up 50, some of them are up 30, 40%. And now they're going, what do I do? Now, the only thing they can do is just flick it really to a more aggressive, shorter term chart, right? And say, well, listen, if it goes below maybe that 130 on a I know that sounds a bit crazy on a 5-minute chart, then take a profit. Or
you do like a minute chart?
Yeah, I can actually. Or we can do a minute chart.
Oh, that's better. See, that's better.
Well, and actually, you know, it's actually holding that minute chart really well. So
139.
So if it goes below say 138, if you're really aggressive, if you're still really aggressive, maybe 130. You know, if you want to give it more of a leeway, maybe it's below 95, 90, 94, right? But
just don't let those profits go. I mean, that's the key here. You know, we said yesterday, it's cheap still. I mean, if this is a really fed income discovery, this could probably still double, triple, quadruple from here, right? I mean, we've seen what happens with Chalice. When you've got a great discovery, it goes and goes and goes. So this is why, you know, you don't want to sell too early. Just protect yourself and to sit in there. There's, like I said, there's more. I think they've got more drilling to come for sure, and they've got the assays of the top part of that drill hole that they've come up with over 1% niobium right at the bottom of the hole. So that's going to be pretty exciting.
Wolf, now let's talk about the takeovers.
Yep.
RDY, which profitable company, very looks like a pretty positive takeover offer for around this $4.
450, wasn't it?
450, right? Okay, I mean, that's a good strong offer. It's never traded that high before.
No. And this is why, you know, Dave, we talked about this, right? This is going to be heaven for the private equity funds out here with the tech route. They're just going to be picking things up on the cheap, and they're going to probably release them again at 5 times the value in about 3 years' time. I mean, this is the ridiculousness of short-term view and focus on investors out there. And there's a lot of them out there, Dave. There's not many long-term investors out there, unfortunately. But this is what happens. The big boys always make the big bucks because they've got that long-term view, and they'll pick them up. So there's another 2 today, Dave. So RDA is one, which we talked about previously. It's not a bad company. You know, it's maybe not, you know, was top 10, whatever, but you can see a profitable tech company has done very well. This is why I think RUL, that we sort of like, me and I think Claude both like, you know, it's in that category where it's a profitable tech space company where, you know, it's not expensive. So we like those sort of companies. So RDY, good on it. It's probably going to take an out because, like you said, I think it's like all-time highs.
Now, Wolf, show me that piece of paper that you wrote.
This is
because you had a right little tantrum. And
depressing.
This morning when I contacted Wolf, he was stamping his feet like a little boy that his mommy wouldn't give him chocolate. He was very, 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 very upset. Go on, show me the piece.
I'm making a list. I've been making a list, right? So we've given you top 10s for a lot of things. And I was making a list yesterday of the risky stuff that I wanted to buy because I think it's a really good company. They are going places, good management, unprofitable, but, you know, it's a good company, and it might be taken out by one of these because we've seen it, right, with so many now, about 5 or 6 so far. So this is my little list that I've made, right? And you can see right here, we've got, here we go. You've got SDR, XRO, ALC, PTG, 3DP, and AR9, right? So that's why I'm a little bit upset this morning, because I wanted to just at least nibble on some of these things. Maybe I've got some SDR, by the way, and ALC on that already in our fund. But, you know, I've got another 4 stocks on that. I think definitely worth a look for the longer term to see whether you can make some money on this. So I'm going to be now redoubling my efforts. I'm going to maybe pick up a few just in case.
So you're angry at yourself because
I am.
Because basically you believed in something and you didn't back it.
Yeah, pretty much. But you know, the thing is, I thought I've got some time to at least do a bit more work on these things and add maybe another 4. But it sounds like they're falling like flies. I have to get onto that bandwagon before it's too late.
All right. So there's 5 companies,
Mm-hmm.
which, and you're seeing private equity absolutely loving the sell-off and taking advantage now of these tech plays.
Mm-hmm.
And there's 5 stories which you think on that list that could be in the crosshairs.
Yes, and there's probably more, and I haven't even added Altium because they've already had a bid maybe 6 months ago, right? Maybe even shorter at $40. So you know, some of the big ones could also be part of that.
So you've got ALC,
Mm-hmm.
AR9.
Mm-hmm.
Can you put them in the list of the most likely?
I think my number one likely is SDR. Is the fact that they listed more at $6 or $7, right? And they are like half price wherever they were, and they're still growing. They'd be now back to the pre-pandemic levels of growth, back to 30%. They're unprofitable, but you know what? They're unprofitable back when they listed at $7, but they're getting better because it's growing and growing and growing. Wow. I'd say they'll be, you know, surely in the crosshairs back. Even the people that sold them, they'll be going, oh, I'm going to buy them back at the half price that I sold them at and release them again in 2 years' time at the same price.
Okay, number 2 on the list.
Number 2, it's a good question. Look, I'm thinking for cheapness, right, and for interest, maybe ALC.
Yeah.
Then I'm looking for probably AR9 and 3DP would be the roughies, right? AR9 and 3DP, and Axora would be the least one, but I would make the most sense for a big private equity like KKR come in and just go, thank you very much. You're down from 150, half price. I am going to take you out because you're one of the best companies globally. Right? That's my way of thinking. But saying that, you know, I'm going to put another 4 on there. And like I said, I've been trawling through, and we've seen already some of the, you know, the Nitros of the world. No, it's a bidding war. Nearmap was the first one. Tyro had a Westpac bid. Dave, they are falling like flies. I'm telling you, if you don't have 1 or 2 of these, you might miss out.
All right, definitely. I mean, I like that. I like the first 2. I like that ALC. I mean, you know, even if it doesn't get taken over, I like it.
Exactly. Well, this is the thing, Dave. You don't have to get them to take them over. They are great companies. In probably 3 years' time, you'd be going, thank God I bought them at these prices. If they, of course, play their cards right.
All right, I like it, Wolf. All right.
Anyway,
now saying that, there were some other announcements today.
Yeah, both of them.
DRE.
Yep. Lots of interesting things there going on in that.
There's a mixture of stuff. A bit of iron ore.
I know. There's everything, isn't there?
I don't.
Pretty much touched every single mineral that's ever listed.
But any lithium in there?
Not Axel, actually. No, I think more rare earths, iron ore, and some other stuff.
Okay. They got and DVP. Holding up all right, isn't it? Did you have a look at that?
Yeah, I did. The thing is, they've had, you know, cash flows finally coming through. So Mr. Beeman is doing a reasonable job in transforming the company from a little explorer to explorer, developer / contractor, right? It's going to take some time. It's still loss making, so that I think there was like quite a substantial money flowing out. That's why it's not doing anything at the moment. But you know, it could be a very interesting company in the next 3 years.
All right, Wolf, listen, I think that's really interesting. So there's 5 possible stories that could be in the crosshairs of private equity that you've introduced to us today. So good to see that. We've had a look at the coal situation, and you know, had a look how we could play it. Yep. And basically, it's really hard. I mean, to be honest with you, it's very, very difficult to work that out. But we're just going to follow the charts, and hopefully, the charts will show us the way. And WA1, just keep putting that on a tighter chart and
going higher and higher for the moment.
Yeah, look, just gotta keep making that chart tighter and tighter.
I'll tell you what, it wouldn't take much, Dave. If they come up with another drill hole that comes through with another, interesting, pretty spectacular results, you could see this easily doubling from here again. This is the beauty about this. Sort of, you're on a nice little horse. Don't sell too early, but just definitely, don't fall in love with it and hold that. What do you call it? You just have your stop loss in place. Just hold your stops, because it could fall to the ground. If the next drill results are not good at all, this is going to probably come back pretty hard.
All right. On that note, I'd like to thank you very much, Mr. Wolfie. Now, tonight with Claude, we are live. So we've got the Ocelot, we've got the Wolf, we've got the Hound at 7 o'clock tonight.
Can we get any other animals on board?
No, not yet.
Next time.
Next time.
All right.
Thanks,
Thank you very much. See you then.
Mate.